Well, first of all, the current market backdrop is I think, characterized by a lot of insecurity. We have a situation of rising inflation, rising interest rates, and many market participants have never seen this throughout their career because it has been a while. So this naturally leads to a situation where market participants are nervous, where they are insecure, where they don't know what to really do. And in general, I would say that the themes can be helpful in such a situation because you're focusing on the long-term structural developments. So this is opposed to the shorter-term cyclical fluctuations, which includes interest rates, inflation rates, and also the macroeconomic backdrop. I think that quite a few of the themes are well positioned when we are going into more economic weakness. Just think about the theme like next generation energy, the energy transition. We will need to achieve this irrespective of the current state of the economy. And there is widespread agreement that we need to achieve this. So that will be quite independent of the macroeconomic cycle as such. However, you can also spin this one step further. If we are going into recession, what is going to bring us out of recession again? I don't think that monetary policy will be a major supporter because we're not raising interest rates just to lower them immediately again. So the burden will be on fiscal policy. And then governments are not that rich. They can't really provide widespread support, but they need to be very targeted in what they are doing. And therefore, again, something like energy transition is something that will be in focus because this is something that you wanted to achieve anyway, irrespective of the current state of the economy. There's always a list of themes that we are looking at, the working list, so to say. Or if you want to compare this to soccer, the first team is obviously on the field, but there are some replacements sitting on the bench. So if something happens on the field, we have something that we can put into the game as well. So some of the themes that we have been looking at are, for example, the theme food security. That is something that gets more and more of our attention because it is a long-term structural development. We do have issues with agriculture. So how can we keep up agricultural production to feed everybody? How can we mitigate the environmental impact of agricultural production, for example? Or if you go further along the value chain of food production, how can we produce food that really has the right nutritional content? We are all eating too fat, too much sugar, too much salt probably, which has a high burden on our health as well. So how can we make people eat better, more fresh produce, probably more vegetables? So there's many aspects that are linked to this that make this theme in a longer term structural way interesting. We're then also looking at some technology related themes like, for example, the metaverse or blockchain technology. So this is something that we are keeping an eye on. If the risk appetite is back on the market, that is something that could be very interesting because investors are prepared to pay a certain premium again for these areas which show growth rates as well. And then also probably one last example is something that we have called the experience economy. The observation just is that the younger generation today doesn't really want to invest so much into the hard assets. So you're not owning a car anymore, but you're rather investing into experiences, say a nice trip to somewhere, and then you might even post this on Instagram to show off a bit. So it's about the experiences and really having this fun instead of the hard assets as such. And there are certain companies that give good exposure to this, so that's also something that we are keeping an eye on. Everybody has been looking at rising inflation as a risk factor, and we obviously do as well. But because we're equity investors, we've also tried to look at this inflation scenario in the sense of, are there any opportunities that are actually coming from this? So is there any market areas that might benefit from such an environment? And the first thought that you might come up easily with is obviously anything that is connected to raw materials. And we do have a good exposure to raw materials in the themes infrastructure, think about iron ore and steel, or even in the theme next generation energy, the energy transition, in the sense of copper and also lithium. But then on top of this, if you think about the sources of inflation, there is this driver wage inflation, and here we just assume that a higher rate of inflation will trigger a higher rate of automation, just to counter this wage pressure that we're seeing in particular on the lower end jobs. So the simple equation is higher rate of inflation is a higher rate of automation. That also plays into the supply chain issues that we are facing. So if you have a fully automated factory, it doesn't really make any difference where this is located. You can bring it closer to the end market and therefore mitigate such issues that the transport is not available or might be disrupted, for example. So you're bringing down the cost effect from this as well. Again, the equation is higher rate of inflation, a higher rate of automation here.